Hello and good morning out there, traders. It is April 22nd, 2024, and welcome to the Apteros Daily Market Insight. Let's start with our recap, then we'll update our session plan levels for today. So, taking a look back at the 19th, we had a pretty straightforward plan for ourselves. We had a line in the sand with scenario 1 being bearish below, scenario 2 being bullish above, and we ended up seeing what transpired coming right out into the open here. Pretty much bearish from this area, pushes down, gives us a second opportunity if you weren't in on the first one, and continues straight down into the target from there. Really straightforward. That was the trade. That was the plan. Second opportunities, if you are a Nadro trader, there was a close call here in terms of following the condition of what this was for the second low here. But as this market continued to develop, we got our first trade here. And then we got a little bit more coming down to this neutral area here and kind of holding below into the close. So some scalping opportunities on the low end of this neutral zone, but nothing more than that. Not really, what I would call sanctioned DMI opportunity here. So really, we just had the one trade, the one area, and played out right to target. So that's pretty much it for the DMI recap. Let's dive into what's going on today. Today, we have a pretty similar landscape as to what we were looking at on Friday, but there is a little bit of a difference. Let me kind of put this all into view a little bit here for us. Okay, so this area is similar to what we had going on Friday. The problem is that the what is picture on it is that it's bearish. It is a bearish location, but it's not as strong as it was on Friday. So we're still bearish in this zone until we accept above this area. But there's a factor that we track in narrative and context called recency. And what that means is the more and more the same idea or the same area gets tested, the weaker it becomes. Now, the first test, the strongest type of situation you could be in terms of narrative and context, by the time you get into the third and fourth tests, the recency becomes an issue with the trade idea. And that's where we find ourselves now on the ES. The what is picture is bearish. We can see that in the narrative and the context on our multiple time frames. However, there's a couple of factors coming in today that make it a weaker bearish area. One, the risk reward landscape on the higher time frames isn't that great to the downside. So we could be kind of in a location where we're starting to see some chop or some back and forth and then possibly a little bit of a pullback. So our higher time frames risk reward landscape isn't that great. And then two, our lower time frames recency isn't that great. So true, the what is picture is definitely bearish, and we are bearish until proven otherwise. But I would not be surprised today to see an alternate scenario develop from our line in the sand area. So this technically is our line in the sand zone. We have kind of two locations here that they're pretty much stacked on top of one another, so you can kind of treat them as one big area. But essentially, scenario one would be the what is picture holds. We continue to rotate back down, testing some older value. And these would be kind of the targets that I'd be looking for. The first target being this 5008 area, and then from there, if you got any type of extension, possibly down into the the 4990s, I would say, whatever that is, yeah, 4990s, and then the 4973s for the full stretch target. But the first target really is this rotation down here to the 5008s, and that would kind of be where I'd be looking in general here for the first target on the scenario one. Now with scenario two, if we get a break up, now we get a rotation possible back up into this area. And that would just, there's really not much in between here for us to use is scaling locations or anything like that. Kind of an open space zone. And you could look at this as the general target is up above here if we start seeing scenario two. So if we see the bulls engage in this market, looking for a rotation across some old value here, back up into the 5083s roughly for the target. And that would be the general layout for scenario two. Once we get up here to this line in the sand, that's where we monitor the higher time frames for continuation of the downside, and that would kind of be the general expectation at that zone. So you'd be seeing bullish opportunity here, you'd be seeing bearish opportunity here. Once we get up into here, it's not a truly dissonant area because the bullish idea is still supported by our higher time frames that are being tested up here. So it's not a true dissonance type of situation. But as you get higher and higher in terms of the bulls, if this opportunity scenario two materializes, as you get higher and higher, the market does get into more and more bearish locations. So you have to be monitoring that as if this market continues to climb. Okay. From there, of course, if we do see a breakdown of this zone, possible stretch target up above here for an extreme day for whatever reason, and that would be like an alternate scenario way down the line. And of course, if we see a really bearish day, we have an overall destination down into here where we could possibly see a test of the higher time frame bullish state that we've been in. Okay, so that is the overall game plan for today in terms of analysis and scenarios. Trade well out there, mind your risk, and have a great trading day.